Hey traders, checking in on the market today. The dollar keeping the 4-hour uptrend going. We've got EMA 12 on the 4-hour as a guide. If we were to lose that, we would zoom out and we would scout a daily higher low, and we would watch EMA 12 on the daily as a potential guide there. So short-term 4-hour is for clarity, and we're testing the top. It is a double top. So support 113.33 and resistance 114.53. Burden on bears. So with that strength, we're seeing continued weakness in most commodities and assets and stocks. S&P 500 got a bit of a bounce going today, broke the high of yesterday, but that was pretty much the best time to short. And then we dropped down, and we did see a new fear low. Depending on what you're watching, it's going to be a bit different. For example, SPY adjusted for the dividend did not break the low, but either way, we can call it a double bottom at this point in time. And we know that if the NASDAQ does not break its fear low, then the S&P 500 is not going to see any bear follow through. So the NASDAQ right now is showing relative strength, certainly not a significant amount, but it's not breaking its fear low at the moment. So burden on bulls to see some kind of shift in momentum here. But again, even if we do, we are just scouting a daily lower high, where the S&P 500 here can see a bounce of multiple percent and just look for the daily lower high to be the result of that bounce. So for me, really all I'm looking for in the short term is, do we break this support and see some kind of follow through in the next few days, or do we see a daily bounce to scout a daily lower high over the next few days? And today did a pretty good job of trading bearish and not over trading, just keeping it simple. So on the morning live stream, I was watching the SPY bull move and ended up pretty much nailing the top. And the reason for doing so was recognizing that we had broken the high of the previous day. The 2-minute was extended just in the sense that it was all bull from the open. And I just liked it as a spot to initiate a bear entry looking for 2-minute consolidation. And at that point in time, that's really all I was looking for. And so I make my bear entry. We start to pull back on the 2-minute. I exit a third of my SPXS position, and then I just let it play out. And it ended up being an hourly rising wedge on the S&P 500. And at the time where I was entering the trade, I was not scouting this bearish pattern on the longer term time frame. I knew that we had been weak on the daily and the hourly, and I knew that recent morning bull moves were given back. So that was a factor, but I pretty much entered the bear trade and then looked at this and said, oh, well, this might roll over with an hourly rising wedge. And the reason I recognized the hourly rising wedge was, again, the resistance break with zero follow through, which is what wedges do. So we then held support and then rolled over into significant considerable weakness. Does that even make sense? Significant weakness from there. And then played the 15-minute lower high, because at that point, the 15-minute downtrend is my guide. And so on this bounce, I'm scouting a 15-minute lower high, and I posted this one on Twitter as far as what I was looking for on my entry, but it was just watching the 2-minute uptrend and saying, okay, if we lose the 2-minute uptrend, a 15-minute lower high is being set, and that's the most likely scenario as we are in downtrends. And this little bounce right here was enough for me to enter an initial position. And I probably would have stopped out if we had broken to a higher high and then just tried again later in the bounce. But fortunately, we didn't. We dropped and confirmed the 2-minute downtrend, and then the 15-minute lower high was set. From there, I was anticipating a 15-minute equilibrium was the most likely scenario. And because that was my second short trade of the day, and I was still holding some of my first short trade, I exited that one pretty quickly for the reason that I was a bit overweight, a bit larger position size than I was comfortable with. Could have been a big win had I held on to it, but exited back down to a comfortable normal day trade position size and was looking for the potential of the 15-minute equilibrium. Obviously, that didn't happen. We just rolled over into complete bear control, hourly bounce into the end of the day. But again, we're just scouting hourly lower highs. And so that's my mindset. I'm just scouting lower highs on longer term timeframes as long as we are weak and as long as the dollar is still strong. And that will change eventually, but until it does, if we were trading right now, I'd be scouting an hourly lower high on tons of individual names. The NASDAQ, again, it is stronger, but just barely holding on here. Still at the hourly, same thing. If we fail the high of today, it's just an hourly lower high. We didn't break 272.02 support, so there is a double bottom down there, but barely clinging on. The bulls do like the fact that the NASDAQ is stronger than the S&P 500. We know the bears are more confident when the NASDAQ is leading to the downside. We did see all of our major sectors drop to the low of the day at the same time today, which preceded the waterfall drop, or it happened at the same time, but not before we started accelerating to the downside. So that was a factor to be looking at. And again, those major sectors are QQQ, XLF, and XLV are the major ones that I am watching to hit lows at the same time. But overall, a win for the bears and scouting hourly lower highs. There were relative bulls out there. Tesla was definitely a relative bull today. CCJ, uranium, was a relative bull. So Tesla formed an hourly higher low. So looking at the uptrend from yesterday, higher low, higher high this morning, higher low again. So we would have to break 277.51 to lose the hourly uptrend and to shape up the daily lower high. But you can see it's a much more convincing bounce on Tesla versus the S&P 500 and the NASDAQ. CCJ also looking good comparatively. Hourly higher low. And if you look at, this is an example of using relative strength to our advantage as traders, because at this point in time, SPY is free fall dumping. But there are individual names that are looking for hourly higher lows. So I'm watching this and I'm watching the 5-minute stair step. And the 5-minute stair step breaking bull on SPY here happened at pretty much 12:20, 12:22, something along those lines. 12:26. So 12:26. What does CCJ do at 12:26? It bottoms as well, right? There's a correlation there. It's actually bottomed a little bit sooner. No, it broke the stair step same time. But my point is, use the broader market for clues of entering the stronger names. Because once we broke that 5-minute stair step on SPY, let's look at our gains that SPY had. We pretty much did nothing. The bull breaks at 12:25, we'll call it. We did nothing for 2 hours. 2 hours later, we're at the same price. What is CCJ 2 hours later? So 12:25, what's it at 2:25? We're up here, and that is a difference of 1.7, 2% almost. So it just is a perfect example where if you enter SPY when it bottoms, you get nothing. And if you enter CCJ when SPY bottoms, you get 1.5 to 2%. That is why I utilize the broader market to help with entries, whether I'm entering a relative bull or a relative bear. It's still greatly influenced by what the broader market is doing, but we're in a market environment where there's a lot of different setups. When you're in an all bull environment or an all bear environment, everything's doing the same thing, just to small varying degrees. But in this market environment, compare the weekly charts for Apple and Amazon and Meta, and you're going to find 3 very different weekly charts. And that is why this market environment is a little bit tricky. Names are doing individual things, sectors are doing individual things. And so it's important to be focusing on relative bulls and bears more so in this market than any other that I've seen in the past few years, in my opinion. SMH still weak. Potential daily bear flag, double top up at 194.89. And just sideways the last 3 days, closing lower than we've opened 6 days in a row. So bulls are playing defense in a lot of places, but they're not really doing much on offense. Tesla is a bit stronger, but that does not rule out the fact that we are looking for Tesla to give us a daily lower high as the result of this bounce. We can say it's positioned better than the broader market. And if the broader market starts a daily bounce, Tesla is likely to continue its relative strength. And again, the biggest changes here, we went from relative strength in Tesla versus the broader market. We double topped at resistance, relative weakness. We held support, and now the last 2 days, the relative strength is back again. So the major levels on Tesla are dictating whether we are stronger than the broader market or weaker. And right now, it's been stronger the last couple of days. Healthcare is still not really doing anything. Started a daily bounce, possible bear flag, no real strength in follow through. Lowest close that we've seen in a very long time. Fear lows are still not in play. So keeping that in mind, we're not close to that level just yet. We would need to drop another few percent. And that's what I'm watching now on everything. Who's breaking fear lows and who is not? XLF broke fear lows today. Granted, it was only by less than 0.5%, but it did break. So that is notable to us. IWM is right there. It has not broken, but we are testing it. So everything's right on top of support. TAN is a potential daily bear flag. There's a lot of space for a daily lower high on TAN to be the result of this bounce. Bears have been loving the cannabis sector. We know the cannabis sector has been a lead bear for years. Feels like years, at least 1.5 years at this point. And we're getting some nice clear signals. CGC, I missed one yesterday where I stopped out right at the top. I was top fishing $3 and it went well and I exited a partial position on the initial rejection, but then stopped out on the break of 3 right before we rolled over into a 7% pullback. So what we had there was a bull break by 2 pennies, a triple top at 303, and then a lower high, and then rolled over. So I just tried to top fish just a little bit too soon. And today I wasn't watching it closely, but again, look at that top fish. Reject from the high of the day and roll over, giving back over 5% in less than 2 hours. So bears are going to continue shorting this sector as long as it keeps working, and CGC has been a nice short as far as clarity and low risk, high reward over the last couple of days. I mean, if you're risking 3 or 4 cents on a short here for a top fish, the reward is 15, 20 cents, which is obviously the kind of positioning we want to be putting ourselves in as traders. So we know the dollar's strong, which means the metals are weak. Lower highs off 4-hour EMA 12 resistance. Still a 4-hour downtrend, nice and clear. Oil, 4-hour lower high, anything under 80.31. Bulls would have to confirm an inverse head and shoulders here to try and shift momentum. And natural gas bounced yesterday, but no 4-hour trend change, and we're testing the lows now. We would have to hold the lows and break 7.12 for a trend change. But for the most part, things are remaining weak as the dollar remains strong. Keeping an eye on platinum. As I mentioned recently, we've got a weekly falling wedge that does have my attention. Not doing anything in the short term as far as trading it, but definitely something I'm watching for, where if it aligns that the dollar tops out when the platinum chart here is tightening up nicely, I will be watching for the potential of a bull play in platinum. But this is something that I'm going to be watching over the next couple of weeks, so nothing imminent. All right, it's all about the dollar's strength and key fear low supports being tested. Bears tried to drive it home today, but we were a bit oversold, and we headed towards support. 5-minute RSI was approaching the teens. 15-minute RSI wasn't that beat up. And you'll notice the environment that we've been in recently, since we bottomed in June, RSI doesn't get that beat up. The daily RSI is just getting oversold, absolutely. But, the 5-minute, the 15-minute, they're not getting crushed like we've seen on the initial wave down. On the initial wave down, we had RSI levels dropping down into the teens and sometimes the single digits and just staying there and getting absolutely smashed. I mean, back here in June, we had a 15-minute RSI down at 14, 17. And we can see since then, we definitely have had some instances where we dumped notably. This was the FOMC reaction, so that's a bit of a special case. But since the FOMC reaction, the short-term RSI levels are not getting too crushed. And we'll see if that changes. But that is why we're seeing a lot of these little short-term bounces on the way down, cooling off RSI levels. And it's not the kind of free fall fear that we've seen a couple times this year. That may change if all of our major sectors break our current fear lows. But that remains to be seen over the next couple of days. Bitcoin had a big bull break overnight, but gave it back when the broader market showed its weakness today. Breakout, holding up real well against the broader market, but can't escape that correlation. Do good things. We'll see you tomorrow. Some last gladiolus and some roses. Some late zinnias. Bitter melons took over. Way more than I can eat. This is some kale. Planted some fall stuff. Cilantro. Dill. Pepper's still going. Arugula. But mostly just an overgrown. These are a bunch of marigolds among the asparagus. TheChartGuys member Robert sent me a bunch of seeds. Those will certainly be coming back next year with how many seeds they're going to drop.